Hey there. Before we jump in, just a quick reminder that everything we talk about in this deep dive is for informational purposes only and not investment advice. Always consult with a qualified financial advisor before making any investment decisions. Okay, so have you ever, thought about owning a piece of those big tech companies? Like they're practically like woven into our daily lives.
Yeah, for sure.
The Apples, Amazons, Teslas.
Absolutely. I mean,
Yeah.
these are the companies pushing the boundaries, of innovation, and
Yeah.
they're all listed on the Nasdaq stock market.
Right, and that's where the Motilal Oswal Nasdaq 100 ETF comes in. It gives investors a way to kind of tap into that exciting U.S. tech scene all through a single investment.
Yeah.
It's like a carefully curated basket of stocks all neatly packaged into this ETF.
It's a fascinating way to gain exposure to, some of the biggest players in the tech world without having to pick and choose individual stocks.
Okay, so let's unpack this a little further.
Yeah.
What exactly does it mean to track the Nasdaq 100?
Well, the Nasdaq 100 is an index composed of 100 of the largest non-financial companies listed on the Nasdaq stock market. And the Motilal Oswal Nasdaq 100 ETF aims to mirror the performance of this index. It's designed to hold the same stocks in roughly the same proportions as the index itself.
So it's like having a mini version of the Nasdaq 100 right in your portfolio.
Exactly. You get the benefits of diversification as you're investing in a basket of companies, not just one, and you're tapping into the potential growth of the U.S. tech sector.
Now, you mentioned diversification, but looking at the top holdings in this ETF, it seems heavily skewed towards tech, doesn't it?
That's a sharp observation. As of November 29, 2024, the top 5 holdings are indeed tech giants: Apple, Microsoft, NVIDIA, Amazon, and Tesla.
And that's not even mentioning other prominent names, like further down the list, like Alphabet, Google's parent company, Meta, formerly Facebook, and even PepsiCo.
Yeah, the index leans heavily on information technology, which makes up almost half of it at 49.7%. That's followed by consumer discretionary at 16% and communication services at 14.6%.
So essentially, the bulk of the investment is going into the heart of the tech industry, with a sprinkling of other sectors for balance.
Precisely. Now, while this heavy tech focus might raise eyebrows for some, it's worth remembering that these companies are not solely reliant on the U.S. economy.
Right. Earlier, we touched upon the global reach of these companies. Could you elaborate on that?
Absolutely. These tech giants generate a significant chunk of their revenue from international markets. In fact, over 40% of their sales come from outside the USA.
So in a sense, this ETF offers exposure not just to U.S. tech, but to global growth and innovation.
Exactly. By investing in this ETF, you're essentially investing in companies that are shaping the future on a global scale.
That's a pretty compelling narrative. But let's be realistic. There are risks involved, right?
Of course, no investment is without risk. This ETF is classified as very high risk because its fate is closely tied to the performance of the tech sector.
Makes sense. It's all about finding that balance between risk and potential reward. What about the costs associated with this ETF?
The total expense ratio, or TER, for the Motilal Oswal Nasdaq 100 ETF is 0.58%. This is a fee that covers the cost of managing the ETF.
All right, so there's a cost factor to consider as well. This is all really helpful information. But before we wrap up this part of our deep dive, I think it's important to remind our listeners
that this deep dive is for informational purposes only and not investment advice.
Exactly. Always consult with a qualified financial advisor before making any investment decisions.
Welcome back to our deep dive into the Motilal Oswal Nasdaq 100 ETF.
So we've established that this ETF offers a convenient way to kind of tap into the growth potential of the U.S. tech sector and, by extension, global innovation.
And we've acknowledged that while the potential rewards are enticing, it's classified as a very high-risk investment due to its heavy concentration in tech.
Right, that concentration is something I wanted to explore further. Isn't there a risk that if one of those major tech companies stumbles, the entire ETF could take a hit?
Yeah, that's a valid concern. While diversification within the ETF helps spread the risk across multiple companies, the performance is still heavily influenced by the giants like Apple and Microsoft.
So what you're saying is that while there's inherent diversification within the ETF itself, an investor should also consider diversifying their overall portfolio beyond just this one ETF.
Precisely. Imagine your investment portfolio as a well-balanced meal.
Okay.
You wouldn't want to eat only one type of food, no matter how delicious it might be.
I like that analogy. You need a mix of different asset classes, sectors, and geographies to create a truly balanced portfolio.
Exactly. Think of this ETF as a spicy, flavorful dish. It can add excitement and potential growth, but you wouldn't want it to be the only thing on your plate.
Now, before we move on, can we circle back to something we briefly mentioned earlier, the concept of tracking error?
Yeah.
Sounds a bit technical. Can you break it down for our listeners?
Of course, tracking error essentially refers to how closely the ETF's returns match the performance of the Nasdaq 100 index it's tracking.
So it's like a measure of how effectively the ETF is mirroring the index.
Exactly. Ideally, you want the tracking error to be as minimal as possible. A low tracking error indicates that the ETF is doing a good job of replicating the index's movements.
And is there any information in our materials about the tracking error for this specific ETF?
Unfortunately, the specific tracking error isn't provided in the current materials. However, it's definitely a question worth asking when doing your own research or consulting with a financial advisor.
Good point. It's always better to be informed and ask those questions. Now I think it's time to address the elephant in the room. We've talked about the potential rewards and the risks, but what about the actual performance of this ETF?
Well, as of November 29th, 2024, the Motilal Oswal Nasdaq 100 ETF boasts impressive returns over various periods. For instance, if someone had invested $10,000 15 years ago, their investment would have grown to over $177,000.
That's a significant return.
Indeed. Even looking at shorter time frames, the returns remain compelling. Over the past year, it's returned about 14%, and over the past 5 years, around 23%.
Those are pretty eye-catching figures. But I guess it's important to remember that past performance isn't a guarantee of future returns.
Absolutely. The market is constantly fluctuating, and past performance is just one piece of the puzzle when evaluating an investment.
Okay, so we've got this ETF that seems to have done quite well historically. It's got a potential for growth, but also carries a degree of risk. What's the next step for someone who's intrigued by this investment opportunity but wants to learn more?
The best next step is to delve into further research and, most importantly, consult with a qualified financial advisor.
Right, because this deep dive is purely for informational purposes and not investment advice.
Exactly. A financial advisor can help assess individual circumstances, risk tolerance, and investment goals to determine whether this ETF aligns with their overall financial strategy.
Excellent advice. We've covered quite a bit in this part of our deep dive, exploring the nuances of diversification, understanding tracking error, and even looking at the ETF's historical performance.
We've certainly packed a lot into this segment. In the final part of our deep dive, we'll wrap things up by addressing some key questions that potential investors might have and offer some final thoughts on navigating the world of investing.
Welcome back to the final part of our deep dive into the Motilal Oswal Nasdaq 100 ETF.
Yeah, it's been quite a journey, exploring this investment opportunity and unpacking its intricacies.
It really has. We've talked about its potential for tapping into the growth of U.S. tech and global innovation, the inherent risks associated with its sector concentration, and even delved into some technical aspects like tracking error.
Right, and we can't stress enough the importance of thorough research and seeking, personalized advice from a qualified financial advisor.
Absolutely. Now, in this final part, I thought it would be valuable to address some common questions that potential investors might have.
That's a great idea.
Yeah.
Let's dive into those questions and see if we can provide some clarity.
Okay, first up, how does someone actually invest in this ETF? It's not like buying a product off the shelf, right?
Right.
You're right. It's not as simple as, adding something to your online shopping cart. To invest in an ETF, you typically need a DMOT account, which is essentially an electronic account for holding your investments.
So it's like a specialized bank account for stocks and ETFs.
That's a good way to put it. Once you have a DMOT account, you can buy and sell ETFs through a brokerage platform.
Okay, so DMOT account, brokerage platform, got it. What about taxes? How are investments in this ETF taxed?
ETFs are typically taxed like equity investments. The specific tax implications can vary depending on factors like your holding period and individual tax bracket.
Right, so it's best to consult with a tax professional to get a clear understanding of the tax implications.
Absolutely. Now, another question that often comes up is about liquidity. How easy is it to buy or sell this ETF?
Liquidity meaning how quickly you can convert your investment back into cash, right?
Exactly. And in the case of this ETF, the liquidity is generally considered good. It's traded on major stock exchanges, so you can usually buy or sell shares relatively easily during trading hours.
That's reassuring to know. It means you're not locked into the investment for a specific period.
Precisely. Now, I think it's worth addressing a concern that some investors might have regarding the current state of the U.S. economy.
Right. There's always talk about inflation, interest rates, and potential recessions. How might these factors affect an investment in this ETF?
Well, that's a complex question with no easy answers. The The U.S. economy, like any other, goes through cycles of growth and contraction. Economic conditions can certainly impact the stock market and the performance of specific sectors, including tech.
So it's all the more reason to do your research, consider your risk tolerance, and seek professional advice before making any decisions.
Couldn't agree more. Now, before we wrap up this deep dive, I want to leave our listeners with one final thought.
I'm all ears.
Investing can seem daunting, especially with so many options and complex terms. But remember, it's ultimately about participating in the growth of companies and ideas you believe in.
That's a great way to put it. It's about aligning your investments with your values and your vision for the future.
Exactly. So do your research, seek guidance when needed, and most importantly, approach investing with a sense of curiosity and a long-term perspective.
Wonderful advice. And with that, we've reached the end of our deep dive into the Motilal Oswal Nasdaq 100 ETF.
It's been a pleasure exploring this investment opportunity with you and our listeners.
And just a final reminder, this deep dive was purely for informational purposes and not investment advice. Always consult with a qualified financial advisor before making any investment decisions.
Until next time, keep learning, keep exploring, and keep diving deep.